Hi there, I'm Ryan Chan, CEO and founder of UpKeep. Today we're going to navigate the labyrinth of governmental accounting standards, specifically GASB 34. We'll demystify what GASB 34 is, its requirements, its importance, and how it differs from FASB. By the end of this video, you will have a comprehensive understanding of this key accounting standard and how it impacts government organizations' financial reporting. Now let's get started. Let's dive into the world of governmental accounting standards with a focus on GASB 34. You might be wondering, what is GASB 34? Well, it's a set of accounting standards put forth by the Government Accounting Standards Board. These standards require government entities to report the value of their capital assets on their financial statements. The Governmental Accounting Standards Board, or GASB, oversees and works to improve government-related accounting and financial reporting. Now let's take a quick trip down memory lane. GASB statement. Num 34 was born in June 1999, and while its standards are voluntary, some states and municipalities have integrated GASB standards into their local laws. So what's the purpose of GASB 34? Well, GASB standards have been revised to make governmental financial reports easier to read and ensure that the data provided in these reports is useful to all those using them. For government organizations, GASB 34 standards should provide a clearer picture of the organization's financial viability. GASB 34 also helps to predict future financial reporting requirements and improves the quality of services delivered to the public. These standards ensure transparency of all spending by states, cities, towns, villages, school districts, and public utilities, which in turn increases public insight and democratizes governmental financial activities. Let's talk about GASB 34 requirements. GASB 34 lays out the financial statements that government entities should provide for review. This includes required supplementary information such as budgetary comparison schedules, as well as financial data for enterprise and internal service funds. GASB 34 also sets forth several requirements, including an accrual-based accounting system where expenses and revenues are recorded on basic financial statements in the same fiscal year they occur. Organizations are also required to report the value of infrastructure assets and deferred maintenance costs, which can be easily tracked in a computerized maintenance management system. This data is valuable for transparency to taxpayers, but this reporting model is also critical in helping any organization gauge ongoing maintenance requirements. By understanding the complete costs associated with deferring maintenance, government officials may be able to make a better case for raising governmental funds to invest in preventive or predictive maintenance activities. Lastly, GASB 34 requires that things like federal grants are recorded as income. Although all governmental accounting requires reporting of income, including contributed capital, will make it more challenging for government organizations to increase rates or tax contributions. Now, why should organizations adhere to GASB 34 standards? Well, doing so can help organizations earn a good credit rating, which can assist leadership in obtaining loans, low interest rates, needed bonds, or other sources of financial support. Before we wrap up, let's address some frequently asked questions about GASB 34. First, what does GASB stand for? It stands for the Governmental Accounting Standards Board. Who uses it? Government officials within states, cities, towns, villages, school districts, and public utilities use GASB 34. Why is it important? The goal of GASB 34 was to improve financial transparency within state and local governments' fiscal reports. It increases governmental accountability by allowing citizens to participate in deciding operating budgets of state and local governments. Finally, what is the difference between GASB and FASB? Whereas the GASB focuses on the government and its agencies, the FASB includes public companies in the United States. The FASB establishes financial accounting and reporting standards for public and private companies and not-for-profit organizations that follow Generally Accepted Accounting Principles, or GAAP. Both the GASB and FASB increase public transparency into the financial statements of trusted institutions. However, they differ in their scope. And that brings us to the end of our deep dive into GASB 34. We've covered its importance, requirements, and how it differs from FASB. We hope this video has been informative and useful. If you enjoyed it, please consider subscribing to our channel for more content like this. To learn more about how UpKeep can help your organization, visit us at upkeep.com. Thank you for watching, and we look forward to seeing you in the next video.